Hello, everyone. Happy New Year. George DeSantis here with the Look at the Market. I have not done one of these in a while because I've been recording our family meetings and sending the recording out to those people on my email list in lieu of doing the Look at the Market. But I thought that since the market has been behaving so moody, to say the least, that I might want to do one of these now and see where we stand, okay, and share that with you. So let's begin by bringing up the disclaimer, and that instructs you that what I'm doing here is not an intent to give particular investment advice to any person. It is really for educational purposes. It's not possible for me to do that, and I'm not a licensed professional investment advisor. I do this for my own purposes, and I share it as a YouTube video. Anyone can look at it, make of it what they will. So let's take the disclaimer down and begin by looking at some charts, okay? So just to remind you now, I'm doing this video on Thursday the 6th, and it's about 2:25, almost 2:30 in the afternoon. So the market is still open, and I'm just going to use the data that I have, of course. I have a weekly chart of the S&P 500 here. Let me point out a few things. First of all, I plotted a line from this high to this high, all the way up here, and then a line from touching these lows, one, two, well, two here. And so we have what I think is a channel, it's an upward trending channel. Prices are trading up and down. We'll see it more in a more pronounced way on the daily chart, but we are trading within this channel here. The parabolic is below the most recent bar. This is a bullish indication. And the moving averages are still above each other, the 4, the 9, the 30, weighted moving average. On the weekly chart, we haven't quite hit those stops that either Jake or Alex Elder would use. Now, if we go down to the MACD, the one we take sell signals from, we had a sell signal here on the weekly chart, and it continued to remain below zero, trending up a bit. And then this current week, it's now trending down a little bit on the histogram. So that's where the weekly chart stands, and that's why what we're noticing is kind of flat right now. Now the momentum indicator that I use, this one from Jerry Appel, the same person who developed MACD, this momentum indicator is above 4%, and it's broken above this trend line here, which I find encouraging from a bullish standpoint, okay? This other indicator, this one here, it's a rate of change, and actually it's a momentum, but momentum and rate of change are very, very similar in terms of their structure. So the rate of change indicator is trading above the 100% line too, or the 100 line. I'm not quite sure if it's a percentage. But anyway, it's trading above this watermark here, this dotted line, okay? And so momentum seems to still be pretty good insofar as that is concerned. And MACD histogram is we're noticing that bears were much weaker here than they were here, and they're even much weaker here this week than they were back here. So let me keep that in mind. Now, the accumulation distribution line on the weekly chart is still very bullish and above the moving average, the 57-week moving average. Now, let's go to a daily chart. Now, on the daily chart, what we have here, we could see that channel that I drew, right? You see these blue lines? That's a channel that I drew. And so what we could see here is that we seem to be trading within this channel Okay, following the cursor, we hit the high of the channel, we come back down, we trade up, not quite to the high of the channel, came back down to the low of the channel, back up to the high, came down a bit, hit the high of the channel, and now we're not quite at the low of the channel, but where we are now is we are sitting at that 50-day volume weighted moving average, that magenta line. And if you look at this yellow line, that yellow line is a simple moving average, 50-day simple moving average. I mention that because let me point out something. We are now just above the 50-day moving average, both of them. And if you look back in time, let's just crunch the chart up. If we look back in time since June of last year of 2000, 2020, okay, since June of 2020, every time we've hit that magenta line, pretty much we've rallied from it. So the magenta 50-day moving average, or even the other one, has been holding a support for a very long time, since March. See here, see all these arrows. Every place that I have an arrow, pretty much lends support. This one came down way below the arrow, and then we had a head and shoulder, reverse or inverse head and shoulder. Then we went up back and we are trading within that channel. Now, since that time, we came back down to the 50-day moving average right here, and we seem to have found some support. We went back up, we came down to it here again, right here, and we seem to have found some support here. We are sitting right there again, and the question becomes, are we going to repeat this pattern and find support? Find support at the 50-day moving average. Let me pause the video because I want to show you something that I just copied or took a picture of from John Murphy's book, Technical Analysis. Hold on. Now, I took a picture of a page in John Murphy's book, Technical Analysis, and I took a picture of the page that shows us an inverse head and shoulder pattern. You can see the neckline here, the head, the shoulder, left shoulder, right shoulder. Then when the price bars break above the neckline, they tend to make a return move before they continue to go higher. This is what the typical head and shoulder, inverse head and shoulder pattern, how it develops, okay? So why did I show you this? Take a look over here at the head and shoulder, the inverse head and shoulder pattern we have, okay? You can see that prices came down, made a head here. We have a shoulder here. We have a shoulder here. We broke above the neckline here, and now we have that return move. The return move ends somewhere near the neckline. It doesn't have to be exactly at the neckline, but it ends somewhere near the neckline here. So this one is just below it. And the question I have is, if this is a typical inverse head and shoulder pattern, okay, is this the return? And is this return going to follow through as the return move follows through in the textbook version here? If that's the case, we should get a rally from somewhere here. Now today, so far today, as I'm speaking to you at about 240 or so, 238, you can see that the market is attempting to make to find support here at the 50-day moving average. And if we do, it may very well turn out to be the return move from this inverse head and shoulder that finds support at the neckline or thereabouts, and hopefully we'll get a return move which is followed by an uptrend from here. So that's something I wanted to point out. Let me take a pause here and see what's next. Now, having said all that, I should point out that there sometimes are failed patterns. There could be a failed inverse head and shoulder pattern. So there's no guarantee that this is going to work out the way I have just described it and the way the textbook describes it. Sometimes you have failed patterns. But let's hope that this is not one of those times and we do get a rally from here. You can see that well, let me get rid of this chart here so I can go further. Yes. So now, you can see that if we look at the other indicators, on the daily chart, we still have a buy signal on this, but this is where we take buy signals. We don't have a sell signal here on the 1939.9. So we don't have a sell signal here. We do have the parabolic switching to a downtrend here. But that happens, and then we can get a reversal like we did here, you see. So all in all, yeah, the market's been pulling back, but it might very well be the completion of this inverse head and shoulder pattern. Well, we'll see how that develops. I had to sell some stocks, a few stocks, because I follow my sell rules, okay? And so I had to end up selling a few things, but that doesn't mean I won't buy others or buy even the same stocks that are now giving me a buy signal later on. Right now, if I look at the bottom of the chart, Williams accumulation distribution line is just below the 57-day moving average. So if it crosses above here, if we get the kind of move we expect from the return move, then this should follow through. I think that's all. That's all I wanted to mention to you. I wanted to discuss this, and we'll see where it goes from here. We'll talk to you on the weekend. We'll have our family meeting, and we'll record it as usual. But just keep this in mind. Okay.